Welcome to Phineas again. Today's topic of our discussion is heads of accounts, or we can call them pillars of accounting or elements of accounting. The understanding of these heads of accounts is very important for accounting students, as the whole accounting is based on these elements or pillars of accounting. So in today's video lecture, we'll discuss all 5 heads of accounts and I'll tell you the trick or the technique to remember these heads of accounts, as normally students face issues in remembering these heads of accounts. So before we move forward, kindly subscribe to my channel Phineas and press the bell icon for notification of new videos. Let's start today's discussion. So what are the 5 pillars of accounting or heads of account? Before telling you the answer to the above question, let's talk about a disease called ulcer. ULCER. I hope that everyone who is watching this video has heard about this disease. As it is not a medical class, so we are not interested in its medical definition. We are only interested in this word. So now the question comes to your mind is what this disease ulcer has to do with our heads of accounts. The answer is that our heads or pillars of accounting are hidden in this word ulcer. So to extract our 5 heads of accounts, we just need to rewrite this word ulcer with A instead of U, that is ALCER, where A stands for asset, L is liability, C is capital, E stands for expense and R is revenue. Kindly note that this word ulcer will help you to remember 3 important ideas or concepts in accounting. First, it will help you to remember all 5 heads of accounts or pillars of accounting. Second, it will help you to remember that out of these 5 heads of accounts, which accounts are real accounts and which are nominal accounts. If you don't know what are real accounts and nominal accounts, then do watch my upcoming video on real and nominal accounts, in which I'll explain what is real and nominal accounts and what are their treatment in accounting. But over here, I must tell you the trick to remember the real and nominal accounts in accounting with the help of our disease, ulcer. The first 3 alphabets of ulcer, that are ALC, assets, liabilities and capital, are real account, whereas the last 2 alphabets of ulcer, ER, that are expenses and revenues, are considered as nominal accounts in accounting. Third and the last important thing about this word ulcer is that it helps accounting students to remember which accounts out of these 5 accounts are the part of balance sheet and which will appear in the income statement of the company. So the trick to remember balance sheet and income statement items is again splitting our word ulcer into 2 parts. The first 3 alphabets A, L, C are balance sheet accounts or items, and the last 2 alphabets E and R are income statement accounts or items. So now we know the importance of this disease ulcer with A. Kindly remember it for the rest of your life, as it will make your life easy as an accounting student. Now let's move forward and discuss the heads of accounts in detail. Our first head of account is asset. So what is an asset? Asset means any resource that the company owns, which has future economic value. Let's understand this definition. Over here, the keyword is resource. So what is a resource? Anything that we need to form or run our organization is our resource. For example, cash, land, building, and even human resource. So, asset is our resource, but do remember that in accounting, we only consider those resources as our asset that we own and that has monetary or economic value. For this reason, we don't record human resource as our asset, or we don't record building or office premises, etc. as our asset if we have taken them on rent. So the definition of an asset is any resource that the company owns which has the future economic value, and there are 2 main types of assets in accounting. That are current assets and non-current assets or fixed assets. So, what are current assets? Current assets are assets or resources that the company owns having future economic value or benefits for less than 1 year. Current assets include cash, cash equivalent, account receivable, inventory, marketable securities, prepaid expenses or any other liquid assets. Whereas the fixed assets are the assets or resources that the company owns having a future economic value or benefit for a longer period. That is more than 1 year, such as land, building, equipment, long-term investment or any other non-current asset. Now let's discuss the second head of account, which is liability. So what is a liability in accounting? Liability is something a company owes, or we can say it is the obligation arising from the financial business events. Liabilities are often referred to as payables. Liabilities are generally separated into 2 groups, current liabilities and long-term or non-current liabilities. What are current liabilities? Current liabilities are a company's short-term financial obligation that are due within 1 year or within the normal operating cycle. For example, accounts payable, short-term debt, or any other payable like salary payable, rent payable, dividend payable, etc. On the other side, long-term or non-current liabilities are a company's long-term financial obligation that are carried over a number of years or at least more than one accounting cycle. Examples are long-term loans and advances, bonds payable, bank loans, and any other long-term payables. The third head of account is capital or owner's equity. Capital or owner's equity is the owner's right or claim on the business. In other words, it is what is left of the assets after liability has been deducted. It includes capital account and drawing account. So what is a capital account means in accounting? Capital account is the company's net worth. Initial and subsequent investments are recorded here as well as changes in the equity of the owner such as net income or losses. And drawing account is a contra owner's equity account and also known as personal account. This account is used to record withdrawals from the company by the owner or owners for personal use during a fiscal year. The next head of account is expense. Let's understand what is an expense. Any cost that has been incurred to generate revenue is an expense. In other words, expenses are amount that have been paid or will be paid later for costs that have been incurred to earn revenue. We can also call it the cost incurred during the day-to-day operations of the business. Examples: salary and wages, rent expense, supplies use, advertising expense, or any other cost for the goods consumed or services received. Our last head of account is revenue. Let's discuss revenue. Revenue means the income or amount received or to be received from by the organization from its normal business activities, usually from the sale of goods or services. Examples of revenues are sales, the performance of services, rental income, interest income, or any other income or fee. So if I summarize today's discussion, our 5 heads of accounts are ALCER, A-L-C-E-R, assets, liabilities, capital, expenses, and revenue. Assets are our resources we own. Liabilities are the amount we need to pay. Capital is owner's claim over the business. Expenses are the costs incurred to generate revenue. And revenue is the income received or to be received from the goods delivered or services rendered. I hope now you understand the 5 pillars, elements or heads of accounting and how to remember these heads of accounts for the rest of your life. In my upcoming video, in the next week, I'll be discussing the charts of accounts, the difference between real and nominal account, the accounting cycle, and the basic accounting equation. So stay tuned with my channel Phineas for more videos. That is it from my side. Till the next video, take care. Bye.